Welcome to another week in review. We're looking at the trading week of July 14th, 2025. Kick it off with data this week. There's not much. Thankfully, Monday we have no major data. Tuesday, I'm going to talk about earnings as well, but I'll do that after data. Tuesday we have CPI at 8:30 a.m., so obviously that'll be impactful for the day. 12:45 to 3 p.m. we have some Fed speakers, but the big driver Tuesday, in my opinion, would be CPI. Wednesday we have PPI, 8:30 a.m., as well as Barr speaking at 10 a.m. So again, big driver on Wednesday would be PPI. Thursday, we've got retail sales as well as jobless claims as per normal on Thursday. And then Friday, we have no major data. We do have the G20 meetings happening on Thursday and Friday, but I don't expect anything really to come out from those that would affect the market in a major way. We do have earnings, major earnings starting this week. So ones that I'm paying attention to would be Tuesday, we have JPM, Citibank, Wells Fargo. We have Wednesday morning, we have Bank of America. We have Goldman Sachs, as well as Johnson & Johnson and Morgan Stanley and PNC. Thursday morning, we have TSM and PepsiCo. TSM will be interesting just as far as from a semi perspective. Thursday after close, we have the start of big tech earnings. We have Netflix. So things to pay attention to. I don't trade earnings personally, but obviously, as we get deeper into earnings season, some of the results and more so the guides will be impactful on what this market wants to do. So we have about a 70-point range on ES this week based on the Friday at the money straddle. So not a ton of expected range. Again, it's mid-July. Volatility really generally dies down, and we go into OPEX next week. So not much really priced in for this week. And as far as where we're sitting on the daily and weekly time frames, the one thing I talked about last week was my general baseline expectation was we were going to probably carve out a trading range up here after this giant fast move up that we had over the course of several days. In my opinion, the likelihood of straight continuation was fairly low, and a correction via time or via price or both was more likely. And we started to see that build last week as we put in or continued a daily balance range. So big thing is, obviously looking at last week, it's an indecisive week. We look at it as a doji candle. I think there's a case to be made that we have potentially some short-term downside in the cards. It's absolutely possible. And again, when I say short-term downside, I'm talking about the corrective activity, which would be completely normal, that would get us back into these prior all-time highs. This is the weekly time frame, prior all-time highs that we broke out of. Buyers aren't in any trouble whatsoever unless we start failing again back below 6160s. So, what I talked about last week, what I talked about the week before is, in higher time frames, the weekly time frame is one time framing higher, one time framing up. The monthly time frame is one time framing up. The daily is currently in balance, so we are in a range of short-term balance right now. But again, there's really nothing for buyers to worry about unless we actually fail this breakout at 6160s. From this large trading range that we've had and these prior all-time highs, which would be 6200s, or pardon me, that's not right, 6140s-ish in this range here on the SPX cash index. So buyers still remain in control on higher time frames. Shorter time frames, we have two-sided tape, which is expected in balance. So we're sitting in a 6-day balance range here. So the high is at 63.35s, the lows at 62.46s. Last week's low is a poor low. So one of the reasons why I think we could potentially see, again, some short-term weakness within this balance range. Friday's session was quite weak. And when I say that, it's interesting because Fridays on summer trading is low volatility, but a Friday that had a big sell in the overnight session from tariff news and wasn't able to recover to the settlement gap and wasn't even really able to recover back into the meat of the prior day's value, to me it's not a strong market. And strength, I think, is relative in this case, in my opinion. Overall, obviously the higher time frame players are everything is one time framing higher, but as far as in the shorter term, the the difference in tape on Friday versus the rest of the days last week, it was just slow. It was slow. It was grindy. It was directionless. There wasn't any large positioning on tape on Friday. And with that also being said, it leads me to believe that we could see a little bit more corrective activity down, potentially clean up these lows, potentially even lower, and get back into a back test of those higher time frame levels at 6,200 to 6,160s. So I could be wrong about that, but again, we basically closed dead center of this 6-day balance. So objectively, we should remain fairly neutral. What I would say, again, Friday's high is very inefficient. So if we look at the TPO, we stopped. This is another sign here as well, in my opinion. So the breakup singles that we had on Thursday, we essentially exhausted into those singles, and we couldn't find buyers to get us to continue above and even backfill that poor structure, even backfill those singles, and we left a ridiculously gross high. So this is a very inefficient high. This will get corrected, or should get corrected at some point in time, but and we do have a period excess, which is the counter to all of this. But this high is terrible, so it would not surprise me to see this get cleaned up. But again, the big thing for me is going to be whether or not buyers want to see acceptance above Friday's high. So above this inefficient high, above this 63.10 to 63.13 level, which is also last week's POC, last week's value area high, up in this range here. So two areas for me that I'm watching. Again, we closed dead center. We're basically right at monthly VWAP right now too. So I want to avoid basically the entire middle of last week's range. The entire middle of this balance range on the daily, I would like to avoid it, because it is directionless, and it is very choppy, it's very gross. So areas I'll be watching will be essentially Friday's RTH high and Friday's low. Where I would expect responsive tape would be at these two extremes, and this is where I like to limit my trades on Monday. And I think will give us some idea of what this week wants. So if we come into Friday's high and we do correct that, so we fill out, we taper out that high, we fill it out a little bit, and we see we see a change in tape, and we see inability to really accept above 63.10s, then I'll look for the short trades to rotate us back down to Friday's lows, and I'll look for, probably in my opinion, more so a move back down into 62.20 or 62.60s, and potentially all the way down into balanced lows at 62.45s. If we can find acceptance, so if we start closing periods above 63.10s, then I think whatever Friday was, it's going to be negated, and we're likely going to reach back up into the balance highs. So above 63.10s, I'll stay long. I'll look for 63.30s at the top of balance, and if we can find acceptance outside balance, then it's purely longs, and I'll continue to look for the extension trades up to 63.70s to 63.90s. The other spot here too, again, if we start sweeping out Friday's low, and we can't find we can't find continuation selling below Friday's low, so we essentially sweep out 62.70s and rebid. Again, I'll stay on the long side, and I'll look for the continuation trade back up into this extreme, and then continuation trade to the top of balance. If we puke below Friday's low and we can't get back above, this is not going to be a failed breakdown, in my opinion. We will see continuation selling, in my opinion, and we'll probably get back down into those prior weekly opens, into the bottom of balance at 62.40s. It's entirely possible we also find a bid down into 62.40s in the bottom of balance. So the one thing I would be very careful with is if we do get down into 62.40s, I'd watch how we respond down in this range. We could find a decent low put in here again, a look below and fail a balance, and then rotates back up. If we can't find that, if we lose 62.40s, then I think it's fairly likely we puke to 6200s and potentially all the way back down to those prior all-time highs at 61.60s. So that's how I'm going to look at ES this week. Again, it's really playing around Friday's high and Friday's low, and which are actually pretty much the extremes of last week's value. So what I want to be, I'm open to two-sided tape because we're in the middle of this daily balance range. So if we see decent sweeps and fails back, then I'll look for the moves back down to the opposite extreme. So fail the high, fail to stay above the high, break back below, I'll look for the shorts back down to Friday's low and potentially continuation lower to 62.45s. The more bearish scenario, bearish is a relative term because I'm not really bearish on this market at this point, to be honest, but the more bearish scenario is we fail Friday's high and we puke back below. This would be inability to accept value higher, inability to frame value higher, and thus it would seek value lower, which in my opinion, if we sweep and fail this, Friday's low is on the table, and I think more likely we would be seeing down into 62.45s. And again, if we sweep out Friday's low and we start to bid back above, we're not accepting value lower, and again, we're looking for these opposite extremes. And then obviously if we straight puke through 62.70s, then just stay on the short side and look for those balanced lows and potentially all the way down to 6200s. That's how I'll play it. I have to be pretty fluid this week, and I can't really, unfortunately, I'd love to say I have a very clear picture of what this week is going to be. I know, I have a, very good idea of, where we're going to find, a stronger bid. The reality is I don't this week. We're in short-term balance, we're in daily balance, and it's very detrimental to have a strong bias when we're literally dead center of a 6-day range. So bigger picture, weekly, monthly, framing higher. Buyers do remain in control on higher time frame auctions. Short term, we're dead center of a range. So being married to a side or being married to a directional bias and in the complete middle here is tricky, and that's not a position that I want to be in. So I'm open to both. I'm open to both sides. We'll play around how Friday's range breaks or how Friday's range fails to break. That'll be the big key for me. The NASDAQ is going to be the exact same thing for me. I'm going to play around the extremes of Friday's range. Whether or not I trade NASDAQ next week, I don't know. I'm playing around with some experimental Orderflow bots right now. So we'll see if anything fires on the NASDAQ. That'll probably be the only reason why I'd play the NASDAQ next week. But again, it's going to be the same thing in my opinion. Watch how Friday's range breaks or watch how Friday's range fails to break. So if we fail to break Friday's high, if we can't stay above, then look for the short side down back to the extreme of Friday's low. If we can't break through Friday's low, again, look for the long side on a failed breakdown all the way back up, probably to weekly POC at that point. And then if we break away from Friday's high, I'm looking for the top of this balance range up into 23 120s. And then if we break Friday's low, be looking for on a real breakdown, be looking for last week's low down into 2770s. Where I'd be really cautious, if we lose last week's low, there's a huge liquidation risk, and I think we'd easily lose 100 plus points, potentially 150 points very quickly. Losing last week's low on the NASDAQ, we have this extremely poor structure from July 2nd. So we have this breakaway, we have these B period single prints down here, but we have this poor structure. We have a very thin P profile right here from July 2nd, or pardon me, July 1st, July 2nd. So losing the top of that range, so losing last week's low, which basically stopped right short of those B period singles, there is a potential liquidation risk, and you could easily see all of this get taken back very fast. So if you're looking for a failed breakdown trade, if you're looking for that long trade below last week's low, I wouldn't try and pick a low down in here. I really think you'd want to see a puke and recovery of 22,780s, and then you could potentially look for the long trade back up into range. Because if you try and just arbitrarily pick a low down in here, you're probably going to get burned. That's going to be nasty to try and find support in there. So that's how I'm going to look at this week. Hopefully that's relatively clear. Again, big things are just going to be playing around how Friday's range breaks, I think, for the short term, or fails to break. I think that's going to be the simplest way for me to look at it. Obviously, if we start breaking away from the 6-day balance, then we could have a nice directional move, especially if we break to the upside. We have clear targets on the upside. And if we break to the downside, obviously we have prior supports, but I think, a break to the downside, again, would be potentially fairly natural and get us, clean out some of the weaker hands and potentially back test the 6200 to 6160s level, which again is completely natural in a healthy market to test the prior level that we broke out from. So that would also put us reversion back into the 20-day moving average again, which is very common. So we're stretched pretty far still. The correction in time, the correction in price, I don't think is necessarily over. Friday's session was choppy. It's a bad high. It's fairly weak. It was fairly weak overall. So open to both sides, and we'll have to see how this week plays out, especially with CPI. So if any of this info helps, please subscribe to the channel. Please like the video if it helps you at all. I appreciate your time. Thanks very much.